I'm investing 2,500 per month, and this is Sonal. And every month I am earning 10% per month. Then what will be the FV after 5 years? Okay, just a moment. So this you need to clarify a little bit. Just a moment. I'm taking this question. Okay. So this is a practical question, and you will get these calculations. Don't worry. All the calculations we are going to get. That's why I'm saying, okay, get your questions verified. So you will get all this sheet you are going to get. Okay. Sonal, are you there with me? I am investing 2,500 per month. Okay. And every month I am earning 10% per month. Okay. 10% per month means what? 10% per month means 250 rupees every month. That's what you are getting. 10% per month. No, I am not getting. You give me the cash flows. Now suppose, okay, just a moment. Okay, I'm trying to get the cash flows. Okay. Just a moment. Is it a practical question or it's just a hypothetical question? Because in finance is a very practical subject. You cannot solve hypothetical question using a practical subject. Understood? Always remember this. Okay. So it is where philosophy works, like, then you give lot of logic. So there you can discuss, but finance is a practical thing. If it is not practical, you will never get the answer. Always remember that. Okay. So now here you are saying, so you need to give me the cash flows, right? Periods are in months. Okay, in months. Then here is the cash flows. Okay, so I am investing 2,500 per month. Zero, 1, 2. So you are investing. So investing means cash outflow. Okay, I am making cash outflow and inflow because this looks slightly complicated. Okay, cash outflow and cash inflow. So you are making minus 2,500. Okay, I'll write. Okay, so now this way you will go 2,500 per month. What will after 5 years? Still 5 years. Still 5 years means 60. Now what is the cash inflow? What is the cash inflow? Cash inflow is how much? Practical, I am investing in share market 250. So 250 is the cash inflow. So that means there is no investment. So net cash flow is this is the net cash flow. Is this right? 250 minus 250 per month cash inflow. This is the net cash flow. Is this, Sonal, is this the correct answer? Again, of course, I can draw it till 60. This is what you are talking about. So then what? How much is what is the cash flow, right? And give me the cash flows. 2,500 per month, and every month you are earning 10,000. 10%. Every month you are earning 10% means total 120% you are getting. Am I right? That's what you mean to say? I have invested 2,500 share market and earned 250 rupees in first month. Okay. Then, so that means you mean to say you will be earning 120%. Okay, got it. Okay, got it. Okay, got it. Okay, so now in this case, okay, I am telling you how much. If you earn 10% every month, how much it will become. Okay, so now your first thing is that your rate is 10% rate. Everything is per month. Okay, rate per month. %. NPR is 60. NPR again month. 60. And your PMT is minus 2,500. Present value is 0. So you need to find out future value. That's it. Amish has already calculated out. So this is the question, am I right? This is the question, am I right? Sonal, okay, fine. Okay, this is now very simple. FV future value 10% per month, NPR is 60, PMT is minus 2,500, PV is 0. Then 1. 83 lakhs 45,745. Got it? Very simple. Understood? This is cumulative, yes. Every month. This is cumulative every month. 10%, 10%, 10%. Every month. You'll have to add it back. Are you getting it? You cannot take out 250 rupees. Then it will be cash flow will be different. Then there will be like net cash flow you'll have to consider. Okay? Yeah. Okay. So now, oh my God, there are so many questions. Okay. Okay. Sonal's question has been answered. Now, Rakesh, Rakesh want to invest 1 lakh. So what is the good decision whether to invest in shares or mutual fund? You see, Mr. Rakesh, Rakesh, are you there with me? Mr. Rakesh. It's a theoretical question. Rakesh. Rakesh. Okay, now you see. I told you one thing in the very beginning. Again, on Sunday, we will talk on this. Do not invest in anything that you do not have understanding. Right? I worked my whole life in equities. Equities means it's not like buying and selling equity. I did restructuring. I did IPO. Okay. I was an investment banker. Okay. So I priced IPO. At what price IPO should be out. How the company will be structured such that share price goes up. Okay. All these things I did. Since 2016 till today, I have not invested a single penny in direct shares. Why? Because I can understand. Now I am out of the industry. Earlier, when I was working at that point of time, I used to give call to the investment management department of the companies, and I used to visit, see their factories and everything. And then after that, I used to write reports along with my team. Today, I do not have that privilege. I am out of the industry. So that's why I do not invest a single penny in stocks. I always use mutual fund. Why? Because I understand mutual fund in and out. I also understand stock in and out. But I know mutual fund I can control. Stock I cannot control. Fund managers, they are in the industry, they can control the stock. Understood? So first thing, always remember, if you do not understand, do not invest, your money will go down the drain. We will talk on it more on Sunday. Remember it. Okay. On Sunday, we'll show you the figures and everything. I'll tell you what is the truth in the investment industry. Okay. Please have knowledge. Only after that, start investing. Right? Got it? Please have knowledge. Only after that, you start investing. Okay. Now, Mr. Chetan Shah. Investing 2 lakhs for 12 years and next 42 years, 2,65,000 return and 42,665. Okay. Chetan Shah, I am taking your questions, beautiful questions. It's a practical question. And Chetan Shah, you are there with me? Okay, you are there with me. Okay, just a moment. Now you need to clarify a few things, the question. Okay. So this means you are investing 2 lakhs for 12 years and the next 42 years, 2,65,000 return. And this is what, I am not getting. And 42 to 6. This is what? This is what? This I have understood. This portion I didn't understand. And 42 into 42nd year. Okay. And 42nd years. Okay. Return and 42nd year. Okay. This much. Okay. Okay. Now very simple. We'll have to do periods. Periods are in years. Okay. That's great, because monthly it becomes very, very hectic. Then we have the cash flows. Now 0, 1. So first 12 years. 12 years means up to 11. Okay, always remember this. Up to 11. Because then only it will be 12. So you are paying 2 lakhs rupees. Okay, minus 2 lakhs. Yeah, Mr. Murali Krishna, please put your question in the, is it 12, 24 lakhs? Yeah, 0 to 11. Okay, okay, somebody, just a moment. Just a moment, Murali Krishna. You put your question here. Okay, just a moment. Put your question here, Murali Krishna. In this is the here. Click it and then put your question here. Okay, whatever is the question, then I'll take it. Okay, now, yeah, Mr. Chetan sir, you are with me? So now next 42 years. Next 42 years means 12 plus 42. So that means 12 plus 42 means 54. Till 54, am I right? Till 54, am I right? Yes? Okay, 54. 54 means up to 59. Till 54. Okay, till 54. So now, and next 42 years. So immediately you will get till 50. Hey, Chetan sir, 53 or 54? Yes, okay, yeah. Okay, so now next 42 years. Next 42 years means, I think it will start from 13. Normally, this is how it happens, right? Normally, there is a one gap, normally. Because what happens when you have to pay, you'll have to pay in the beginning. That's okay. 1 year you will have to pay. 1 year means not after 1 year. You'll have to pay today. And when they pay, they always pay after 1 year. Okay. Very smart. Because people like me used to work there. Okay. Okay. Now, yeah, tell me. January and December, yeah. So now, so from 13 should I consider? From 13, because then only it will be 42. Okay. Plus 265, 1, 2, 3. Then this is how much? And 42nd year. 42nd year means this is that's it, right? That's it, or something else. 42nd year, 2665, 266500. So this is again in addition to this. This is 26500 plus 266500, 26 lakhs 65, 26 lakhs plus 26 lakhs, right? Okay, just a moment. 2,67,000 plus 26. Okay, this is okay. This is okay. 26 lakhs. This is okay. So I have added it to 2,65,000 plus 26 lakhs. Correct, Chetan sir? Correct, Chetan sir? Okay. So now 47 years, 26 lakhs, right? So I'm giving you, it's correcting it. Okay, 26 lakhs. Okay, so now you know what to do. Two 665. Okay, now it is okay. Last year May 2665 000. Okay, last year May 2665. Correct? 265. Okay, so now 42nd year 2665. 2665 2665 000. Okay, okay. Yeah. So now we know ROI equal IRR. Very simple. Now it is very simple. (6.83% per year). Okay, got it. So now, yeah, you see, good, bad, ugly, how it is. It depends on you. Okay, it depends on you. Okay, Mr. Alam, please, okay, kidhar gaya? So you please put your question, all your questions you put in this form. I am giving you the form. In this form, put your questions, all your questions you put in this form. I got 8 lakhs rupees as bonus. Should I put it in a home loan or invest as lump sum? Okay, now I have taken 45 lakhs loan for 15 years in 2019. EMI is 4,200 per month. I got 8 lakhs rupees as bonus. Should I put it at home loan or invest as lump sum? Now, tell me one thing, Mr. Prabhat, are you there with me? Yeah, you will get the Rajiv Ranjan, you will get it. Okay, okay, fine. Now tell me, what is the EMI? Okay, I'm not going to calculate it out because this is not important in this question. What is the interest rate you are paying here? Mr. Prabhat, what is the interest rate you are paying? You know that, right? So can you tell me what is the interest rate you are paying? Currently, 8.5% you are paying, right? So now tell me, the money you have, now are you sure? Can you earn a guaranteed return which is significantly more than 8.5%? Prabhat Ranjan, say 10% or 11%. If not sure, then repay the loan. Understood? Because now home loan rates are very high. So if you are not sure whether you'll be able to make significantly higher than the whatever rate you are paying, if you're not sure about that, then repay the home loan. Right? Yeah. Very simple. Okay. Now, Dolly Ratnani, I am 43. Can I retire with a crore rupees at 60? What could be the best investment combination and how much? Yeah, Dolly Ratnani, are you there with me? Dolly Ratnani, are you there with me? Dolly? Yes. Okay. Okay, now you see, we are going to show you a lot of possibilities on Sunday. So please be there Sunday at 10:30. I'm going to show you the possibilities because at this juncture, it will be too long a discussion. Okay, so you will get the answer on Sunday. Okay, be there on Sunday very much. Okay, now next comes here. Sukant, I'm investing 7,500 per quarter since December 2013 to till date. Currently, the corpus is 44,18,000. Is this good? And if the same will continue, what I'll get in my 20-25 years? Okay, you have set a very difficult question, long question actually. Okay, Sukant, are you there? Sukant, are you there? Okay. 4,18,000. Yeah. Okay. Be with me. Okay. So I'm taking your question. I'm calculating your question here. Duplicate. Sukant. Okay. Investing 7,500 per quarter since December 2013 till date. That means how many quarters are there till date? Periods are in quarters. Can you give me this? How many quarters? QTRS. December 2013 to December 2013 to December 2022. So 9 years. 9 fours are 36, right? 36. Yeah, 36 quarter. Okay, 36 quarter. Just a moment. Okay. 36 quarter, 36. Okay, here. So here you have got 4,18,000. 4,18,000. So this is right now. I'm investing 7,500 minus 7,500 per quarter, and you have got this much. Since and to let currently corpus is this much. Okay, so now what is good, bad, or ugly? So we know how to calculate it now. Very simple. 36 and how much? 30. Yeah, let's say, okay, fine. Let's say, like, this is September, October, November. Yeah, this is okay. Sorry, this is September 35th, 35. Yeah, you are right. Yeah, Rajiv Ranjan, you are right. Thank you for correcting me. 4,18,000. Now you see, we can use rate function also. We can use rate function also, and we can use IRR. Since we have already written it down, we can use IRR. Any function we can use, right? We'll get the same answer. So I am taking IRR. (2.45% per quarter). Okay, so that means this is equal to 2.45% into 12. Sorry, into 4 is equal to how much? 9.80% per year. So can got it? You are getting somewhere around 9.8% per annum. Okay. Okay. So now your second part. Okay. This let me. Okay. Let me put it here. Okay. Okay. So now part 2. Now part 2. Mahabali part 2. Mahabali part 2, is this good? And if the same will continue, what I'll get in my 20-25 years. So 2022 to 2025. 2020. So how many years? 3. 3 4 are 12 months. Okay. So NPER is, so rate we know, NPER, PV, PMT, PV, FV. Okay. So we know this, right? So rate we know, rate is 2.45% per quarter. Okay, we are taking per quarter. 2.45% quarterly. Okay, quarter. NPR is how much? How much it will be? 2025 means 3. 3 months. 3 4 are 12. Right? Am I right? 12 quarters. Am I right? So come. Am I right? Okay. PMT is same, minus 7,500. Minus 7,500. PMT, PV is 0, lump sum. So future value, very simple. FV, bracket starts, rate is this much, NPR is 12, PMT is this, PV is 0, comma 1. You'll be getting 1,07,200. And if you add this, now you can do one thing. So this you will continue, right? This you are not going to withdraw. So you can consider it as PV. So then if you do not withdraw, okay, this 4,18,000, if you do not withdraw, then it will be 6,64,000 approximately at this rate. Clear? Understood? Okay. Yeah. Okay. So now, so this is Sukhant. I have already addressed. Oh my God, questions are coming in and in. I am investing 14,000 rupees in mutual funds from 8 years through SIP and getting XIRR of 15 to 16%. Is it advisable to continue investing in mutual funds or withdraw? Okay. Hariteja. Withdraw and invest in PMS. Now you see, I always tell you one thing. Hariteja, are you there with me? Are you there with me? Okay. Now you see, I always tell you one thing. Do not invest in anywhere where there is, if you have no knowledge. Now you see PMS and mutual funds, there is no difference structurally. Okay, there is a like, you know, organizational differences are there. There are legal differences are there so far, but structurally, financially, there is no difference between PMS and mutual fund. Whether you are investing in PMS or in mutual fund, if you have thorough knowledge, you continue. If you have no thorough knowledge, then you must have thorough knowledge. We use mutual fund. Okay. Why we use mutual funds? Because we can control mutual fund. There are a lot of advantages with mutual funds. You can sell it immediately. You can switch, right? So you cannot continue with one mutual fund for your life. Okay. So we are going to see into it on Sunday. And if you have already gone through level 4, you must have got an idea. And if you have already gone through that booklet that I have given you as soon as you join, okay, if you have gone through it, so I'm pretty sure you have already got an idea, right? So you cannot continue with one mutual fund throughout. You'll have to keep on changing because valuation keep on changing. Okay, if you do not do that, you are not going to get, then your return depends on your luck. Okay, if you have knowledge, you can control it. If you have no knowledge, you'll have to pray God. That's it. Okay, so always have knowledge, then after that you take a decision. Okay, Hariteja. Okay. Now next is coming from EPV, FV, and return. No. So how to calculate NPER, EPV, FV, and rate are known. So Hariteja, PMS is portfolio management services. Yeah. Soham, are you there? Soham. Okay. One by one, I'm taking all your questions. Don't worry. Okay. One by one, I'm taking all your questions. Right. Sonam. Okay. Soham is there. Right. Now, how to calculate NPER, EPV, FV, and rate or no? It's very simple. It's very simple. I am just showing you. It's NPER. Like I have told you, right? All these things, whatever you do not know, you just keep it outside bracket. Understood? Very simple. Like this is how it will happen. Here I am only showing you. Okay. So NPER bracket starts, and then you rate, comma, then PMT, comma, PV, comma, FV, comma 1. That's it. Whatever you do not know, keep it outside the bracket. You will get it. Understood? So will you be able to do it? Yeah, very simple. These are the 5. These 5 elements, the entire investment industry is on that 5 elements only. Very simple. Okay. Now, Vaibhav. Invest 250 rupees per day, that is 91,215 per year for 16 years. And in 26 years, get 50 lakhs. Oh my God. Okay, Vaibhav. Are you there with me, Vaibhav? It's a huge calculations you have asked me to do. Okay. I'm taking this challenge. I don't know whether the computer will be able to do it or not, because every day. Okay. Invest rupees 250 every day. Rupees per day, that is 91,255 per year for 16 years. Okay. And in 26 years, get 50 lakhs. So now you see, we'll have to do, if it is a per day, at the most you can make it per month. Do not make it per year. If you make it per year, then like entire things will be diluted. Okay, so it will be too much dilution. Do not do that ever. If it is per day, you should take it per day. Okay, so now yeah, per day, in this case, per day will be huge. So how many 360 into 16, right? 360 into 16. How many? 5,760. There are too much of data. So we are making it per month. Is it okay? You will not get the exact answer, but you will get some idea. Very near answer you will get. Okay? Yeah. So now that is 250 rupees in 30. So how much it will be? 250 in 30. Oof. Okay. 250. $7,500, right? Excel can handle, it can handle that much of data, but like, yeah, so it will give error. So you'll have to give this thing. Okay, we can do that. It's not an issue. 26 years will be how much? Okay, let me do that. Okay, 365. 9,400, like 9,490. I'll have to go up 9,490. Okay, huge. Okay, so that's why I'm taking as I am showing you, so you'll be able to do it yourself. Okay, I'm making it monthly. How much it was? 30 into 250 into 250, 30. 7,500, right? That is 7,500 per month. And I know this is not the correct method. I know that. Okay, you should do it per day, but I am taking it per month. So I'm just going to show you the method. Then after that, you'll be able to do it yourself. Okay, so periods month. So 16 years. 16 years means is equal to 16 into 12. 192. So 192, 7,500 for 192. This itself is a, this itself will be a very huge thing. 192. Oof. Under 92. Okay, till here. 7,190 for 16 years, and in 26 years, then after that 0. Okay, so then in 26 years, 26 years means 26 years, 26 into 12, 312. 312 month, you will get 50 lakhs. Am I right? 312 means 312. 312, 370. You'll get 50 lakhs. Okay. Yeah, Vaibhav, is it correct? Vaibhav, Skin, they have written invest 250 per day, but I am sure they will take yearly premium. Oh, acha, is it like that? Oh, okay. If they are taking yearly, then you'll have to put it yearly. Vaibhav, okay, always be sure, like, because you see, that's what I say. So if I think in that case, like, yours was right. So 250 rupees per day, that is how much is the per year, how much it was? 91,250. Okay, then you will have to take it yearly. Whatever way the cash flow is, okay, 91,250. Then you'll have to take it yearly. Okay, don't worry. Don't worry, okay, we'll do that. Whatever, okay, we can calculate it out. Okay, don't worry. Okay. So for 16 years, okay, then it is easy. Easy means okay, till here. Minus 91250. Minus 91250. $16 years means up to 15. Okay, always remember this. Because yeah, because it is starting from 0. Okay. Then after that, 50 or 26 years, right? 26 years, you are getting 50 lakhs. All these things you can delete. Okay, this is correct. Bio, correct? This is correct, right? Correct, Vaibhav. For 16 years, have to pay premium. Then after 9 years, you'll get 50 lakhs. After 9 years, no, I am not getting. 16 years, yeah. Till 16 years means then after 9 years, yeah. No, so 25 years. That means 25 years. 16 plus 9, 25 years. It will be 25 years. Okay, not 26. It will be 25 years. So then, okay, this will be here. Yeah, this looks good. Yeah, this looks logical. Okay, so now, right. So now we need to find out ROI, and you know how to calculate it out. IRR. So how much you are getting? 6.99% per year. If you are giving your cash flow yearly, then it will be 6.99% per year. Okay, Vaibhav? Done? Okay. It is CAGR. Every scientific calculation is CAGR. Always remember this. Okay. This IRR, whatever we are discussing, they are all CAGR because it's a scientific calculation. Any calculation which is done scientifically, they always give CAGR. Flat rate, right? Simple rate. These they do not exist in finance, real finance. Got it? This is CAGR, no flat rate. Flat rate doesn't work. Okay, then loan is Mr. Henry Silo loan is 70 lakhs at rate 11% for 84 months, and every month deposit 12,500. How much be the total amount I need to pay to the bank? You see, Henry Silo, are you there with me? Henry Silo, are you there with me? Okay. See, Henry, so this will be slightly above whatever we are discussing here. Okay. So, and we'll have to do detailed calculation. How much be the total amount I need to pay to the bank? That means you need to ask. No, I am not getting you. 11% for 84 months, and every month deposit 12,500. Okay. So how much to be total amount I need to pay to bank? That means, okay. So what is the total amount? Okay. So now, yeah. So I know it. Whatever you're okay. I got it. Okay. So total, how much at the end of the 84 months? How much total you will be paying? That's one, right? It's 7 lakhs. Okay, fine. Okay. So now you see this calculation it's beyond our syllabus. Okay, at this level. So that's why. So we are not discussing because to make it understandable to everybody, we'll have to do it will take long. Okay? I can just simply calculate out, but the thing is that yeah, so people will not understand, right? So that's why I am not taking this question. This question is out of syllabus, not whatever we are covering. Okay. Yeah. Okay. Now, Monica Shah, I am investing 30,000 per month. Current value of my investment is 20 lakhs. What will be the total value of my investment after 15 years? Okay, Monica Shah, are you there? Monica Shah. Okay. So can you tell me what is the return you are getting till now? Investing 30,000 per month. Currently, value of my investment is 20 lakhs. 14 to 15%. Now you'll have to give me, and not like that. You're investing 30,000 per month for how many years? Then I'll calculate it out. For how many years? 15 years. Okay, just a moment. Okay, now, yeah, now this gives a, now I can calculate it out. Okay, so Monica Shah. Monica Shah. Oh, sorry. Okay, so I'm investing 30,000 for 15 years, right? For 15 years. For 15 years. Okay. Current value of my investment is 20 lakhs. What will be the total value of my investment after 15 years? Means another 15 years. Okay, so there are two parts. There are two parts into it. So now first part is the part 1, Bahubali part 1. Part 1, Bahubali part 1, rate, NPER, PMT, PV, FV. Now we do not know the rate, so we know NPER. NPER is how much? NPER is how much? How much NPER? Loss. Amish has already calculated out. Monica, what is the NPER? Is how much? 12 into 15. Awesome. Yeah, Rajiv Ranjan. Awesome. Okay, got it. That's what I wanted to actually ask. Okay, Monica. So 12 into 15 month. Okay, because now we are doing it monthly. PMT is again month, because PMT is again month. PMT is again month minus 30,000. PV is 0. Future value is investment is 20 lakhs. Okay, 20 lakhs. Am I right? Current value of my investment 20 lakhs. Yeah, Monica, this data is right. The data is correct. This data is correct, Monica. No, tell me. 15 years you have been investing. How many years you have been investing? PV is 20 lakhs. No. First part. PV is 20 lakhs now. No, first part. First means you are investing from 15 years you have been investing, right? When did you start your investment? How many? 5 years? Okay, 5 years. Okay, 5 into 12. 60 months. 2015, right? So motamoti is 60 months. Yes or no? 5 years, right? 60 months, right? 60 months back, you started investing 30,000, 30,000, 30,000. 60 months back. So whatever lump sum amount you gave 60 months back, that was the present value. Okay, got it? 0 was 60 months back. 60 installments you have paid. Am I right? Monica, 60 installments you have paid, right? How many installments you have paid? Monica, how many installments you have paid? I have been accumulated 20 lakhs by investing 30,000 per month. 30,000 per month for how many months? For how many months? How many months you have made the payment? 60 months. Okay, so this is the 60 months you have been paying 30,000 per month. Okay, 60 months before, and 60 months before you started. So your future value was today it is present value, but 60 months before, like you'll have to go backward. Time machine. Understood? Yeah. So now rate is how much? What is the rate? RET rate. You know, NPR is 60, PMT minus 30,000, PV 0. 20 lakhs you have got, right? 20 lakhs, comma 1. So you have got 0.34% per month. Okay, so is equal to how much? 0.34% into 12. So somewhere around 4% per month you are getting. 4.08%. Okay, this is part 1. Part 1 is gone. Now part 2. Understood? Now part 2. Bahubali part 2. Now part 2 going forward. Again, same thing, rate. Same rate, you are getting the same rate. You are getting the same rate. Yeah, Rajiv Ranjan, yeah, that's fine. She's saying 66. We can make it 66 also. She said 66, that's why I'm taking 60. Sorry, 60, that's why I'm taking 60, okay? She knows it better. So rate is same rate, okay? Rate is 0.3454% per month. Oh. Same rate. NPR same, how much? 30,000 you will continue? 30,000 you will continue? 30,000, okay, fine. Oh, not NPR is, okay, sorry, so sorry. NPR is investment after 15 years, means from today, 15 years hence, am I right? That means 15 into 12. 180 months, okay? Okay. PMT is same, minus 30,000. Okay. PV now, you see this 2 lakhs, 20 lakhs rupees will continue. Okay. So today, 20 lakhs rupees will be your PV minus 20 lakhs rupees. This will continue. Understood? We had done this kind of calculation today. Okay. So in the whiteboard, I did the calculation, right? So you have a PV also, and you have a SIP also, both. Now, what will be the future value? Is equal to have V bracket starts, rate is this much, NPR is this, PMT is this, PV is this. Run 1. One crore 11 lakhs 46,000 rupees. Understood? Clear? Happy? But we'll see, right? I don't know whether it's good, bad, ugly. Happy? Okay. So you need now can I do something? Now suppose you get proper knowledge on mutual fund investment. Okay. I'll tell you detailed on Sunday. Okay. So in that case, you'll be able to get somewhere around, say from here onwards, whatever you have done, right? From here onwards, then if you have proper knowledge about mutual fund investment, how to choose right mutual fund at right point of time, okay? You'll have to keep on changing based on the valuation. Have you gone through level 4? Monica, have you gone through level 4? Have you gone through level 4? Okay, you have gone to level 4, right? So you have understanding, okay, that you need to keep on changing based on the risk level of the market. You need to keep on changing, okay? So if you do that, then you'll be able to earn much more. But still, very conservatively, I am considering 12% return, okay? So 12% return means 1% per month. In that case, it will be your 2.7 crores, right? Can you see how much you are losing? Right? But you must have that much of, you must have knowledge. When you have knowledge, then only you can have surely this kind of return. But if you keep on investing in one, then you will getting 4.08%. This is what people get, in fact. Understood? This is what happens to people, not only you, everywhere. 98% people, this is what happens. Okay, Prabhat, don't worry. We'll discuss it on next Sunday. Okay. Yeah, you will have to wait till Sunday. So this is what happens. So I am considering, okay, so for your calculations, I'm taking this one, okay? 100%. So when I say that people lose crores of rupees over their lifetime, people don't believe. People think I tell lie. I don't, okay? Because I have spent my entire life in finance. So I know that people lose crores of rupees. Ganesham Chetri, what happens in case of market correction? When the market correction happens, you know what to do when you have knowledge. Nobody can stop market correction. But when the market correction happens, then only knowledgeable people make a lot of money. That's the difference. Warren Buffett cannot stop market correction. Rakesh Jhunjhunwala could not. Damani cannot stop. No, in fact, Reliance, they also cannot stop. Okay. Only thing is that those who do not know what happens if you are in the middle of the sea and high tide and low tide comes, you need to pray God. Those who are surfer, for them this is fun. High tide will come, low tide will come. Expert surfer, for expert surfer, it is fun. For Warren Buffett, it is fun. For Peter Lynch, it is fun. For others, it's a time to pray God. That's what exactly happens everywhere in life. In finance, in life, everywhere. If you have knowledge, it becomes a fun. If you have no knowledge, you'll have to pray God. And God helps them, those who have knowledge. God will always help the surfer. Okay. Cruel God. Okay. Now there is Upendra Babar. In Nikhil questions, if after death my nominee will get 90 lakhs to 1 crore amount, then it is possible to count ROI. Yeah, Upendra Babar, are you there? Upendra Babar. Upendra Babar, I think is not there. Okay. Okay, you are there, right? So you are asking in Nikhil's question, if after death my nominee will get 90 lakhs to 1 crore amount, then is it possible to count ROI? Yeah, of course, why not? But the thing is that in that case, you'll have to give in different, okay, it's a possibilities. Case one, like, if that guy, like an insured guy die at this age, if he dies at this age, if he dies at this age. But let me tell you, so far I know, because let me tell you one thing. My friend, one of my good friends, in fact, best friends, he bought similar kind of product. Okay. After buying the product, he came to me and said, hey, I have bought this. Is it good? I said, it's not good. Okay. I showed him the return, 4% or something, 5% or something. Okay. So your money has gone down the drain. And he invested huge amount. Every month, some 20,000 or 30,000 or something, every month. Okay. I said him, like, this is what we are getting. Okay. From that, of course, it's from a different company. From that company, you see, you please make sure where they are going to give your this thing. Because in this case, or my friend's case, he is insured till he is paying the premium, but he is making the contribution. Once his contribution is stopped, after that, he is no longer insured. Okay, so make sure. Okay. Understood? Who was this? Okay, Mr. Babar, Upendra Babar, you can do this case by case. You can just add it and you can do the calculation. But make sure till what point you are calculating, you are insured. Ghanesham Chetri, in pure equity, how to find the rate? You cannot find rate in pure equity. In fact, in mutual fund also you cannot find rate. But in mutual fund, we know how to surf it. What to do when the market goes up? Market goes up means how much? There is a scientific way to find out whether it is overvalued or undervalued. Why? It's not necessary that market is gone up, it is overvalued. It's not necessary. It is foolish. In fact, even after market going up, it might be very, very undervalued. Similarly, even after its correction, it might remain highly overvalued, even after correction. Okay, so there is a scientific way to understand it. When you understand it, the valuation of market, equity and debt market, then you can surf. Understood? But nowhere you can find the rate. Nowhere. Okay, Joseph Isaac, are you there with me? Okay. To get 1 crore after 20 years from now by investing 1 lakh every year, what rate should I should be earning? Okay, beautiful question. Again, let me tell you, on Sunday we are going to answer similar kind of question. But still, since you have asked us and this is within our syllabus, I'm taking this question. Okay. Joseph. To get 1 crore after 20 years from now by investing 1 lakh every year, what rate I should be earning? Okay, so that's my very question. That is this a good plan, investing 20 lakhs to make 1 crore for 20 years of time? Okay, beautiful. Awesome. So this is a very simple rate. We write all the 5 parameters: NPER, PMT, PV, MV. So now NPER it's yearly. Okay, yearly. Yearly, how much? 1 lakh. Okay, minus 1 lakh. Oh, sorry, 20 years. Sorry, yeah, okay. 20 years, right? Oh, so I think I put percentage here. 20 years, PMT is minus 1 lakh. PV is 0. Future value is 1 crore. Yeah. And we need to find out the rate. Amish, awesome. Some of you guys are really become super smart. Okay, love you guys. Rate 20 years minus 1 lakh 0 FV 1 bracket close 14%, 13.71%. Yeah, possibly. Yes, Amish, high five. Okay, got it. Joseph got it. 13.7%. Yep. 13.7%. And yeah, so you make sure you have proper knowledge. You can really surf that tide, high tide and low tide. You'll be able to do it. Okay, but you have that knowledge. If you do not have that knowledge, then practicality is people get from minus 5% to 44%. Of course, 20 years you'll be getting some around 4% to 30% or something. It depends on luck. Okay, but if you have knowledge, you can get around minimum 12%. You can easily get if you have knowledge. Okay, but if you have not, then that's how the range is very high. Minus 4 to 30 or 20 years will be somewhere around, I think 4 or 5%, 4 or 5% to 25% or something like that. Okay, so we'll show some data on Sunday. Okay, we'll show some data on Sunday. What happens when you keep on doing SIP without understanding the market, without changing? Okay, what happens, that you will see. Okay, so many questions. Okay, oh my God. Okay, Supriyo Mukherjee, identifying the right mutual fund which rating entity to follow. How many years track record needed for a mutual fund track record? Okay, Supriyo Mukherjee. Supriyo, are you there? Are you there? Yeah, thank you, Henry. Supriyo, are you there? It looks like you are a very serious reader. Supriyo, I think he is not there. Supriyo, not there. Okay. Anyway, chalo, we are going ahead. And now Mr. Sasidhar Thonape. Sasidhar, are you there? Sasidhar. Sasidhar, are you there? Sasidhar, are you there? No, people have gone. Oh, it's already 10, 11. Yeah, people have gone home. Junaid, are you there? Junaid, yeah, Junaid is there. Yeah, I can see. Please take my one. Yeah, I've got it. Yeah, Junaid, your turn has come. Junaid, you are there or you have left? I think I just left. Okay, you are there. Okay, fine. Okay. Invested rupees, yeah, Junaid. Invested rupees 80,000 for 6 years. After gap of 4 years, from 10 years, we'll get this much for 9 years and 7 lakhs as much. Okay, I'm getting all the cash flows. Okay, you have given beautifully. You have given the cash flows. So that's great. So I love it when somebody gives me the cash flows beautifully. Okay, Junaid. Invested rupees 80,000 for 6 years. 80,000 for 6 years. 80,000 per year. Am I right, Junaid? 80,000 per year. Right? Okay, per year. For 6 years, after a gap of 4 years, from 10 years, we'll get 50,000 for 9 years. Okay, and someone else. Okay, fine. Okay, so now it's very simple. Periods and cash flows. Zero, one. Okay, so for 6 years. Okay, 0, 1, 6 years. Okay. 80,000 minus 80,000. Six years means up to 5. Okay. After a gap of 4 years, 6, 7, 8, 9. 6, 7, 8, 9. After a gap of 4 years. After a gap of 4 years, from 10 years onwards, okay, beautiful. From 10 years onwards, you will get 50,000. You will get 50,000 plus 50,000 for 9 years. 9 years means 19 years. Am I right, Junaid? Okay. Junaid, that's all. You said how so. Okay. Okay. Awesome. Okay. Guwahati. Okay. Murkhor Guwahati. Hengrabare. 19, 10 years and then 9 years. Okay. 10, 19. Okay. That's it. You'll get 50,000 for 9 years and 7 lakhs at the maturity. 9 years means here you will get 7 lakhs. Okay, so you are getting how many? 18 and then 7 lakhs. 50,000. Then after that, last is 7 lakhs or 7 lakhs 50,000. Last one is what? Junaid. Last one is 7 lakhs 50,000 or only 7 lakhs? 7 lakhs. Okay, yeah. This looks logical. Okay. Done. This is correct, right? Yes, correct. Yes. Okay, now we'll have to do R1. I think Junaid is taking dinner. Taking dinner also and attending this also. Am I right? Okay. Okay. 6.28%. Yeah, Vishal. Quick, super quick. Before my coming against that. I love you guys. Like, this should be the spirit. You see, you work so hard, right? You work so hard and your money goes down the drain. Right? And I have seen it. And I was in that industry. And when I used to discuss, then my mentor told me, okay, what are you waiting? Why don't you start this? I was not starting this, okay, for only after COVID, when I didn't have any other option, I was discussing with my mentor. He said, why you do not start it? Please start. Please help people. So you'll get money also and people will get benefited. Okay, that's what happens. We work so hard. Then after that, so you should be super fast. Right? You should be very agile. Then you can make a lot of differences. And I already calculated it out, right? When I say people save crores of rupees over their lifetime with knowledge, people don't believe. Now I did the calculation, right? With that lady, I did that calculation somewhere. So be super fast. Okay, I love you guys. When you are super fast, super active, this is how it should be. Otherwise, you're working hard, getting salary and then a boss is shouting every day, stress, and somebody is taking away your money. You are not even aware of that, and you are very happy. Okay. But good, at least you are happy. Okay, Adit Bhutani, are you there? Junaid, it is not SBI. Okay. It is everywhere. This is everywhere because I am from that industry, right? So today I am here. Almost all these guys were my clients. All these guys were my clients. I used to advise them, right? Okay, Adit, I am investing 2,40,000 per year for 15 years. ROI is 6% per year. I do not withdraw it and stop investing after 15 years and withdraw the total principal. Okay, just a moment. Where is the text trap? Because it is going. Okay, just a moment. Huh? Okay, wrapping. Okay, just a moment. Okay, principal plus interest amount after 6 years. What will be the FV? Okay, just a moment. Okay, Mr. Adit Votani. Okay, so you are also calculating FV, how much it will be. Okay, this is your question. I'm investing 2,40,000 per year for 15 years. ROI is 6% per year. You have already calculated out. I don't have to calculate out, right? I did Bhutani. So you have calculated out correctly. Giving my method or some flat rate or something. My methods, right? So this is my method is the scientific method. Okay, all other methods are there non-scientific. They are used to cheat people. As like you have seen, people are getting 5-6%. Okay, so now a 6%, I do not withdraw it and stop investing after 15 years. And withdraw the total principal plus interest amount it after 68 years. What will be the FV? Okay. Okay, now, okay, so now I think you have got similar kind of question. Again, like I am going to show you, probably also you are losing crores, right? Because of lack of, probably, I'm not very sure. I'm investing 2,40,000 per year because you are investing good amount, 2,40,000 per year for 15 years. ROI is 6% per year. Okay, and investing was okay after 15 years, and I do not withdraw it and stop investing after 15 years. Okay, fine. So there is again part 1 and part 2. Part 1 and part 2. Part 1. We need is present here. Yeah, we'll calculate it out. Yes, Rajiv. We'll calculate it out. Okay. Rate and then 6% per year. And then NPER is 15 years. And then after that, PMT is minus 2,40,000. Minus 2,40,000. PMT PV is 0. Future value. First stage is that after 15 years, how much it will become. Okay, Adit, this is the first step. First step is after 15 years, how much it will become. Okay, is equal to FV. Adit, are you with me? Adit? Okay. FV, then very simple, 6%, 15 years. PMT is minus 2,40,000 and PV is 0 and 1. So after, okay, it is coming out in pound. Okay, it doesn't matter. Okay, it will be because of 59,21,000 rupees. Okay, don't get confused because it is coming out pound. Okay, because of formatting. Okay, it's okay. So now this is the part 1. Now part 2. In part 2, again I am giving you all these things. Okay, in part 2, rate will be the same. 31 crores. NPR will be how much? Interest plus amount to stop investing and withdraw the total principal interest amount it after 68 years. Adit Bhutani, 68 years after 68 years. So it's for your 68 years. After 68 years. After 68 years. I mean, Bhutani, are you sure it's after 68 years? For like, next generation or something? That's what you are doing? Just, I'm curious. For next generation, okay? Okay, good, yeah. For next generation, NPR 68. 68 years, okay, I'm taking 68 years, huh? Okay, Amish has already calculated out. NPR is 54. Okay, 54, okay? Okay, 54, okay, fine. Okay. So no PMT, right? Am I right? No contribution, no SIP, 0 PMT. Right? No SIP, no contribution. Yes? You are not going to make any systematic comparison, okay? Yes or no? Adit, am I right? Donate to my kids. Okay, fine. That's fine. That's fine. Okay. No PMT. Okay. So now PV will be, now today's FV will be your PV. Understood? Today's FV, that will be PV now. And it will go ahead for 54 years. Okay. Similar concept. Okay. FV, future value, then very simple. 6%, comma, 54, comma, 0, comma. Present value is this much, 1. Hmm. 13 crores, 77 lakhs. Rajiv Ranjan, tomorrow, not tomorrow, Sunday, you are going to see, yeah, 6% if you are really making, when you consider inflation, it will not be very high. Okay, it will be very less. Okay, so we are going to see it on Sunday. Adit Bhutani. So if you give me this amount, Adit Bhutani, if you give me this amount, so how much I'll be making? Minimum guaranteed. Want to see that? Do you want to see that? Not me, you can make it. Make it like a very conservative. How much? Got it? This is what happens when you have knowledge. This is what happens. That's how all the financial institutes are, they're working. Okay. Anyway, I'm going with your number only. Okay. Now, Samson. Samson, are you there? Samson, are you there? Now, I invested 2 lakhs in share market through another person who pays back approximately 5% every month. Principal remains same and is again invested in the next month. Then what will be the, just a moment, and again, I think format, where is the format here? Okay. Principal remains same and is again invested in the next month. What is the ROI? You see, ROI you have already calculated out. Same ROI, 5% per month, 60%. Got it? Samsung, it is 60%. Because you 5% you are getting every month. 5% you are getting every month. Okay, so 12 months is how much? 5% into 12, 60%. Very simple. Your only thing is that you are taking the money, it's not getting compounded. If you like invest it back, then you can find out how much it will be. At 60%, you can find out the future value. Okay. Okay. Very simple. Now the last question is from Dr. CNM Lavanya. What is the minimum amount for annual lump sum investment in SIP? Minimum amount, yeah, I think 500 rupees or something. You can ask that agent or somebody. Dr. CNM Lavanya, are you there? Dr. CNM Lavanya, Dr. Lavanya. Dr. Lavanya? Not there. Okay. Okay, you are there. You see, what is the minimum amount for annual lump sum investment in SIP? Annual lump sum investment means annual lump sum, or you see annual lump sum investment in SIP. So this is something very, very okay. So this is not a correct question. Either you are doing lump sum means one time, or you are doing SIP. Okay. So now you tell me, you want to do lump sum or you want to do SIP? These are two things. Okay, lump sum is one thing, SIP is one thing. So you must have a lot of knowledge, right? A lot of knowledge means you must have proper knowledge if you really want to make money and really create a significant difference in your life. And not only in your life, like in your family and your future also. Let me tell you very honestly, right? Everybody needs this, particularly today. It's not, that was not necessary during my father's day. You see, my father expired a couple of years back. Today, my mom is getting pension because my father worked for government. Like now, today, in the post-liberalization era, so this is, we are post-liberalized working class, right? We do not have these facilities. We do not have any security. Okay, so every individual should be properly educated with finance, personal finance. I'm not talking about corporate finance and all. It's not necessary. Personal finance, it should be a course at the college level only. Now we are going to discuss it more on Sunday. It's a ticking bomb. People have started suffering. Okay, more and more such cases will come up in coming years. So yeah, so this knowledge is, and it's very easy. On Sunday, we'll see. Today also, I am pretty sure you have got an idea, right? It's not that difficult to make good amount. Okay, so on Sunday, we are going to see it more. Only thing is that you will have to have proper knowledge. Have proper knowledge, you can make respectable corpus. Good enough corpus to spend your life beautifully. Okay, everybody can do that. Everybody can do that. But problem is, since people have no knowledge, so they waste their money. That's what happens. Money goes down the drain. Okay, Rajiv Ranjan, are you there? Rajiv Ranjan. Monthly, not on a monthly basis. Now you can see a minimum amount, right? 500 rupees you can start with. Okay, Mr. Lavanya, Dr. Lavanya, 500 rupees you can start investing with 500 rupees. As simple as that. Okay, I'm investing 12,000 plus 6650, 10% of my basic salary per month for next 22 years in NPS. Good to invest or not? Okay, you see, Rajiv Ranjan, you see, one thing, is it compulsory that you will have to invest this much? Or you can stop it, Rajiv Ranjan. It's not compulsory, right? Are you going to join my next level course? Yes, okay. So in that case, you do not go for this. Okay, you will be able to earn much more. Okay. So you don't have to do NPSs. But still, yeah, a lot of people, even after, like, because if it is a compulsory, like it will be deducted from your this thing, from your salary, like compulsory, then it's a difference. Okay, you have no choice. But there also there is a choice. Nowadays, you can change your portfolio twice a year. Now they are considering to change your portfolio 4 times a year. Okay, so this is necessary. You must have ability to change your portfolio because market doesn't remain constant. Market keep on changing. It's not that every other day market changes. It's not like that. Okay, it takes years. So I had to take 2 years. I was invested in debt market. My money was in the debt market only for 2 years. Okay. So now people are thinking, everybody is laughing at me. Yeah, analysts, you see, He's investing our money, he's investing his money in debt market. We're in the equity making 30%, 40%. Suddenly 30%, 40% has become minus 15%, minus 20%. Okay, I was getting 8%. Then I entered equity. So that's what I say. So we surf when there's a lot of high tide and low tide. This is fun. We surf. Got it? So you'll have to keep on changing. Okay, so this is how you can benefit from the valuation, fluctuation of valuation of market. Okay, with NPS also you can do that. Nowadays it's do that, they can do that, and if they make it like 4 times possibilities, if they can make it possible to churn your portfolio 4 times in the NPS, you can do that very much in the NPS also. But let me tell you, there are much better options outside. If you manage yourself with proper knowledge, if you manage outside yourself, you can earn much more. That's the fact. Okay, my students, they can earn better return than a lot of fund managers, professional fund managers. My students. Okay, so this is the fact. Yes, auto switch and manual switch options are available in NPS. Yes, auto switch, yeah, manual switch, yeah. So that you, of course, we do manual switch. Auto doesn't work. Auto is for like for those who are amateurs, like those who are professional. Because I camera, right? I understand camera, right? All the professional photographers, they will never use auto camera. Okay, those who do not understand, they use auto camera, right? Automatic. Professional cameras, they always need their own camera. Like for example, us, we do not need anything auto. We do it ourselves. We do not use hybrid. We do not use multi-cap or something. Okay, so they are for people like for example. So my wife, she told me, hey, get me some. I want to make aloo gobi, so get me some vegetables. So I bought aloo. I bought Kerala, right? I bought Kerala's bitter gourd. I bought some cabbage. Then I bought some bacon. Then I bought some spinach. Okay, this happens. Okay, so this is what happens in the finance industry also. Got it? What other options? Few examples, please. Rajiv Ranjan, you see, like that you'll understand, because that is you'll have to give me 8 hours minimum to make you understand what are different options. It's mutual funds only, but there are different mutual funds. You know how many different mutual funds are there? So far your investment is concerned, in terms of investments, how many different mutual funds are there? How many mutual funds are there? Different mutual funds, you know that? There are basically, okay. So there are basically there are 3 basically. Okay, then all others are mix and match. So far investment is concerned. Okay, basically major. One is equity, another is debt, another is money market. Okay, and there is other commodity, etc., etc. They are not very often used, frequently used for our investment management purposes. Okay, we use that. Then in case of equity, there are index fund, there are large cap, there are mid cap, there are small cap. In case of debt fund, there are long duration. Then in between there are so many mid to long duration, etc., etc. But there is long duration, mid duration, short duration, ultra short duration, low duration. Similarly, money market. In a money market fund, there are liquid fund, overnight fund, etc., etc. Overnight fund means not today you invest tomorrow. Okay, overnight fund is different. You can invest in overnight fund. You can invest for 30 years, 60 years. Understood? So now these are, all of them are good. But what happened? People think whatever is giving higher return, they are good. It's not like that. Okay, all of them are good. Only thing is that you need to understand what point of time which one you should use, and that's what we do. That's what I'm saying, surfing. Okay, at some, all this equity, all these mutual funds, we use all of them. Debt fund, we use all of them. Depends on the situations, depends on our goal. 2 things. One is what is our goal, how much risk we can take for the goal, and number 2 thing is Number two is, what is the valuation of assets? Most important thing. Based on that, we keep on changing our portfolios. That gives you good return. Understood? Clear? Yeah, you'll understand. You'll have to give me 8 hours. 8 hours, I will make you understand. Okay. Okay, guys, I think there is no more question. This was the last question, already 10:37, guys. Thank you so much. So is it an eye opener for how many hours? Still there are 38. From 100, 38 are still there. Eye opener? Eye opener, yes or no? Is it an eye opener, yes or no? Yes, right? So I told you that people lose crores of rupees over their lifetime. Okay, so I have proved it. Right? People don't believe when I say today I have proved it. So people do lose crores of rupees over their lifetime. Okay, we'll see into it more. We'll go into the details on Sunday. Do not miss it. Bye. Do not invest in anywhere that you do not understand. Always do follow scientific matter. Do not jump into conclusion. A lot of things like Nikhil gets, it looks beautiful, very beautiful, but they are not. Always remember that. Okay. Good night. See you on Sunday. Don't miss it, 10:30. If you miss it, you are going to miss big thing and we do not record. Okay. Bye. Good night. See you. Yeah, today's recording you will get today's recording. We'll get today's Google Sheet also. You will get the link in your WhatsApp group itself. Okay. Don't worry, you will get it. Provided there is no technical problems, right? You'll get it. Okay. Sunday morning. No, Sunday morning it is not 8 hours. 8 hours is like, my next level course workshop is 8 hours. Okay, so we'll talk about it on Sunday. 8 hours means like, this is the minimum. Minimum if somebody gives me, then I can make you an expert in choosing the right mutual fund for different different goals and at different valuation level. Market keeps on value, debt market and bond equity market, both market. So there are three different markets: debt market, bond market, or equity market, debt market, and money market. All of them are volatile. Okay, so you need to know how to surf. Either say udhar. Okay. Okay. 10:30 a.m. on Sunday for master class. Yes, exactly. Okay. We'll talk. Ram Kulkarni will talk about it on Sunday. Sunday we'll talk about my next course. Right? Okay. It will be much less than whatever you can save. Let me believe it. Trust me. Okay? It will be less than 20,000 rupees. Okay. We'll get a beautiful amount. Okay, don't worry. And you'll get a less than 20,000 rupees. That much I can tell you. Okay. Get ready. You'll have to buy immediately. Okay. See you then. See you. Good night. Bye. See you. Definitely. That's for sure. 100%. Whoever comes with me, they become master. I know that. God sent me for that. That's what everybody told me. And that's why I'm in this profession. Leaving investment banking. Okay, I'm going to start investment banking again. Okay. Thank you, guys. Thank you. Bye-bye.